Hello again. Welcome to another episode of the Uranium Market Minute. Today is Monday, December 20th, and this is episode number 53. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Before we get into it, of course, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing. Always take responsibility for your own choices. All right, with that said, let's jump right into it. A daily scoreboard. Spot price of uranium today, relatively unchanged, 43.25 per pound mid-market. Interestingly enough, the Sprott Physical Uranium Trust has been out of the spot market largely for almost a month now, and the spot price is staying pretty firm. I'm actually surprised to see that, but there are a couple of reasons for that, in my opinion. One, the utilities know how thin the spot market is, and they're not playing there. They are out of the spot market almost entirely. Knowing that any purchases happening in the spot market are likely to move the price up. They still have a number of the utilities have deliveries on previously signed contracts that are partially referenced to the spot price. Therefore, any movement upward of the spot price not only affects new contract terms when it comes to either market reference contracts or the spot price actually influencing the term price to rise, which it has over the past few months, but also the deliveries that are partially referenced to the spot price, they'll end up paying more out of their pocket due to that rising spot price. So the utilities are out. They're out of the spot market. Are there traders there? Yes, there's definitely some pounds being traded back and forth, but most of the volume at this point is coming from the financials. And when Sprott is out of the market, the spot market is quiet. And the fact that it's staying firm in price while the market is quiet, in my opinion, is a very good sign. We probably will see a little bit of manipulation going towards the end of the month. So maybe towards the end of this week, early part of next week, we could see a little bit of a tick down in spot price. If you see that, that's basically expected. Again, that's due to certain traders, selling a little bit of pounds into the market, taking a lower price for the purpose of lowering that price at the month end, because their forward month offtake coming from the producers that they're getting uranium from, that price is dictated by the month end spot price. And so oftentimes the last day or two of trading of each month, we'll see some downward pressure on the spot price. Not every month, but most months. So if you see that in the next 5 or 6 trading days, don't be surprised. That's perfectly normal. And perhaps that's kind of the last little flush down that we would see before we kind of get this reset going in the beginning of the year. Again, the Sprott Physical Uranium Trust did not purchase any pounds on Friday, not raising any new capital. They're still trading at a discount to NAV, although they did get to a premium to NAV during that solid day that we had. I think it was Wednesday of last week. They closed on Friday, or opened this morning, I should say, at a negative 5.66% discount to their net asset value. Anybody wanting to play some arbitrage on this discount to NAV, it will surely be at a premium again, and that's a nice little trade you can play. Their treasury remains strong, 27.1 million in cash. They're unlikely to spend this money. Maybe they go in for another 100,000 or 200,000 pounds, but I think at this point they're just kind of sitting on the sidelines for the remainder of the year, for the holidays, just kind of letting the market do what it's going to do. And then we get that reset towards the beginning of the year. Have some institutions probably booking some gains and year-to-date gains, etc. Again, just to cap the Physical Uranium Trust, since the 17th of August, when their ATM went live, they've purchased 23 million total pounds of U3O8. They've raised almost $1 billion, 999.2 million in new capital in just about 4 months. Again, they are authorized to issue up to 3.5 billion, and they've done almost $1 billion of that so far. So they've got 2.5 billion available in this ATM that they will surely make use of during the next leg up that's likely coming in Q1. Turning to the sector equity ETFs, URA reported no redemptions. URNM reported a decrease in 25,000 shares. That's just a small amount of mandated selling, 1.9 million. What does that mean? The selling that's happening in the sector right now is almost entirely retail. That's my interpretation. Looks like the sector continues to try to carve a bottom here. The redemptions, I've said this multiple times already, I'm surprised they have not been larger for these ETFs. The combined AUM decreased on Friday by 36 million, have a combined AUM between the two ETFs at 1.95 billion. Let's take a look at the charts today. Starting off with URA, as we always do, as the largest and most liquid vehicle in the uranium space. You can see gapping down on the open, trading down in the first couple of hours of trading. Looks like that dip is being bought. Looks like it's trying to print a hammer here. Traded down below that rising 200-day for the first time since August. Again, if you look back at August, we did see continued weakness during a period of time when the fundamental strength for the sector was growing by the day. Sprott was their ATM was going live just around the corner. Sprott had just approved the takeover of UPC a few weeks earlier in July, and yet the sector continued to sell. Everybody was pulling their hair out saying, what the heck is going on? We were issuing bulletins to our members saying this is a time to be buying. How did that turn out? Very, very well, obviously. But we did see a couple of days. We saw what I would call an undercut low, kind of this false breakdown below that 200-day moving average. You can see that the 50-day is flattening. Looks like it's ever so slightly wanting to turn down. We did have a couple of months of the 50-day turning down back in July, August. So it wouldn't be the first time this has happened during the bull market. I would like to see most of these stocks in the space hold around that 200-day. Again, I've mentioned this multiple times. I'd like to see some sideways chop, to see a bottom form. If we can get this to chop around for another week or two, just above this rising 200-day, that would be beautiful and would set up a nice launching pad for the next leg. I would like to see that. Of course, we could see this come down and do a bit of an undercut low here below the 200-day. That would be nothing too surprising if we did see that. Looking at the Sprott Physical Uranium Trust, again, also printing a hammer, gapping down on the open, printing a hammer. It looks like we're making a higher low here. That would be a good sign. At this low, we were down 8, 9, even close to 10% discount to NAV. We're back maybe a 5 or 6% discount to NAV. Doesn't look all that bad here, really, for the Sprott Physical Uranium Trust. The chart is holding up well. The spot price is holding up well. We could see, like I mentioned, that flush down, maybe another 50 cents or a dollar in the last few trading days of the month, but we'll be watching out for that. So going into the mailbag, somebody had reached out asking about the EU taxonomy. I know I spoke about that on Friday to a little bit more length. Is that being postponed? It is looking like they are kicking the can down the road a little bit here. However, we are hearing that it's the inclusion of nuclear and probably gas as well is pretty likely. It's looking more and more positive that that is going to happen. And it looks like what they're discussing now and the reason for the delay in that decision has to do with refining the language of the inclusion of nuclear and gas. We do believe that that is coming, and that should be coming soon. However, that official decision might not come until maybe the first week or two in January. So again, this is being delayed, but if it's being delayed for this purpose, we're talking about a very positive stamp of approval that could be coming for nuclear in the EU. That's a huge, huge deal. So I'm willing to wait as long as necessary for that, because this is a long-term play for me. One point I wanted to just point out, because this pretty negative sentiment across the sector right now, and there's a lot of fear in the broad markets about Omicron variant and all of that. And I just want to point out something I've been thinking about with regards to the uranium space is that what do we really know about the supply and the demand? There's a lot of opaqueness in this market. It's very difficult to pin down exact pounds, where they're being held, at what price they'll flush into the market. It's likely we'll see some secondary supply come into the market as far as inventories. That could come from Japan at much higher prices. I've talked a few times about what Art Hyde from Segra calls the reverse carry trade, pounds being flushed into the spot market when there's severe backwardation that's caused by the Sprott Physical Uranium Trust buying in the spot market, a sharp rise in the spot price surpassing the term price. That is a backwardated market. Essentially, the term price is a forward curve price of deliveries out into the future, anything beyond 12 months exactly. But so we have pounds coming from there a little bit when there's a backwardated market. Those are things that we know, but we don't really know exact volumes, right? It depends on the severity of that backwardation. It depends on how many pounds are held in carry, which is a difficult number to pin down exactly, but it's probably a decent little chunk, but nothing that it's probably less than Sprott has purchased so far, okay, held in carry that could flush out. The Japanese inventories, that's not going to really come in any sort of volume until much higher prices. We're probably talking 60, 70 plus dollars a pound until we see some of that come in greater volumes than it already has, which Mike Alkin and Tim Chilleri from Sachem Cove, they model out 5 million pounds a year, and they think that's being very, very generous in terms of Japanese pounds being sold into the market. And plus, you're seeing rising sentiment in terms of restarts in Japan. So it's really only the utilities holding pounds that have that are responsible for reactors that are not going to be coming online or have already been permanently shut down. There's only a small handful of those. So we don't think that's going to be a huge amount of volume. But what do we know? Okay. What do we know in terms of mines coming back online? Let's take a look at the elephant in the room, McArthur River, 18 million pounds a year. So Cameco is so far is signaling to the market what they're not hearing what they need to hear. They're not signing the contracts they need to sign to justify bringing that back online yet. Will that happen? We're confident that it will. They seem to be confident that it will. They have signed some more term contracts in 2021, which means they're likely signing those at prices that they like. They won't give us those numbers. We would assume, 18 to 24 months ago that those prices were about $45 a pound, given inflation, given supply chain constraints, given a number of other factors. We believe that price is likely above $50 to $55 a pound term. And they likely are not giving those pounds away at entirely fixed price. They're probably at least doing partial spot reference with some kind of ceiling. So 18 million pounds a year from McArthur. If they announce tomorrow that McArthur is coming back online, 12 months from now is their first production. Okay. So that would be early 2023. That first year of production is 4 million pounds. Okay. So we're talking 2023 at 4 million pounds. 2024 is full production. So 4 million pounds, especially considering the financials involved, is pretty negligible. So McArthur River is 70% owned by Cameco, 30% by Urano. So 5.4 million pounds will be going per year when they're in full production to Urano. They do sell some pounds in the spot market. So a few million pounds a year maybe will be going in the spot market from McArthur River. Now, does McArthur River being back online, full production, bring us closer to getting near a balance in the structural supply and demand? Yes, it does. But you have to remember those pounds that are being produced by Cameco are for fulfillment of long-term contracts, period. Okay. So a portion of the 5.4 that goes to Urano is likely to come into the spot market. Big deal. What else? Okay, that's 2024 really we're talking about. And that's assuming that they announce a restart sometime soon. Okay, then we have Paladin's Langer Heinrich. That might come on earlier than McArthur River, not only because it has a bit of a faster restart process, but also they are 25% owned by the Chinese, and they are pressuring them already to bring that mine back online. And they're trying to get a larger percentage of that mine's production. So that might come on a little bit earlier. That's what, 6 million pounds a year with a 25% offtake. The offtake might actually be larger than that going to China. But again, Paladin is stating to the market, they are not bringing that online until they have sufficient term contracts as well. So barely any of that, those pounds are coming into the spot market. Again, I would model that out for 2024. Maybe they get into some production late 2023, but that's really speculative at this point. Greenfield projects, Global Atomics DASA project, first production 2025. Vimi's Mulga Rock, first production 2025. Boss's Honeymoon, maybe 2024, probably 2025. Okay, so there's greenfield and brownfield production that can come online, but we're talking a solid 2 to 3 years before that happens. Okay, so really what I'm bringing all this up for is to make a point. In times like this, when there's shaky nerves in the market, when the sector is pulled back to its rising 200-day, when sentiment is low, these are the times where you have to ask yourself, think about when that supply is coming back online. Think about what are some of the upcoming catalysts in terms of the elements that could move this market and likely will move this market. So that's primarily that's the Sprott Physical Uranium Trust, that's Sprott taking over URNM in February of 2022. It's potential of the New York Stock Exchange listing in probably Q3 2022. Do you think in the next 2 years, before any reasonable amount of supply, any meaningful amount of supply can come into the market, will the financials, will the institutional players take advantage of the setup here, or will they not? That's the bet you're making. I'm sure you know the bet that I'm making. Just want to bring up those points and kind of flesh out some stuff I've been thinking about. Anyways, I hope everybody's doing well. Tomorrow is the solstice. It's a day I celebrate. I just like that turn in the season. I like the feeling of the days getting longer, and that starts tomorrow. So hopefully everybody's doing well and hanging in there during these trying times in the markets, trying times in the world. And I think that we will have a very abundant and a very blessed 2022. And I wish that for all of you. All right, we'll see you guys tomorrow. Cheers.